go to the market, show you the picture today. We do have some red across the board. You know what happened by now with the PCE report, which we're going to get to. But we do wrap up this week, I think, with new questions about the state of the AI trade. Following the Wall Street Journal reporting today, Alibaba has a new chip to fill the NVIDIA void in China. You had, obviously, NVIDIA not trading well since its earnings. Other chips are down today. Broadcom reports next week. Micron's down. AMD is down. The SMH is having its worst day since April. Stephanie Link. Where does that leave us? Where does that leave us?
I mean, these stocks have had such a nice run. I was just looking at Broadcom in the past year, up 84%. I mean, that's a huge, huge number. It's re-rated. The whole group has re-rated. Are there question marks about maybe the growth isn't as fast as we have been seeing over the last several years? Of course. But there's a couple of stats we got from NVIDIA. And I don't own NVIDIA, but we all pay attention to it. Long term, they see $3 to $4 trillion in CapEx and data center spend between now and 2030. And they did not change that. That they reiterated yesterday. That means your CAGR long term is 40 to 45%. That's still very, very healthy growth. Short term, the data center numbers still growing 17% sequentially from the past quarter that they just reported to next quarter. That's over $7 billion of revenue without China.
I know. Let me stop you 1 second.
No.
Let me stop you 1 second. Let me stop you just 1 second.
I'm just telling you that.
I know. I got you. You asked a question. Is growth not what it was? Of course. So then why wouldn't you say, of course, to the question of, well, then why do the stocks deserve to trade at what they're trading at? Why does the stock appreciation justify itself if the growth rates are going to slow in critical areas like they are for NVIDIA with data center? I know the numbers are still extraordinary.
They are.
They are. However, if you're telling me that the growth is not what it was, why should everything else be like it is?
Well, you're talking about NVIDIA trading at 25 times forward estimates, and they just told us that the industry is going to have a CAGR of 40 to 45%, and they're the #1 player in the industry. Same deal, by the way, with Broadcom. They've got 3 custom ASIC customers that are going to grow 60% year over year. The growth numbers are still very, very large.
Are you worried now about Broadcom for next week? The stock's down almost 5% today. Why is Broadcom going to have a better reaction following its earnings than NVIDIA has?
Okay, because the reason why I own Broadcom over NVIDIA, and that is because of the diversified total revenue mix. So 31% comes from data center AI. 41% comes from software, and that's VMware, and that's recurring revenue, and that's higher margin business. And then the rest is kind of the cyclical troughing business, like the enterprise networking stuff that Marvell, by the way, told us yesterday is bottoming. So I like the diversification. I like the inference in terms of expectations. If you have inference and you have large language models, and that's increasing, and you need inference for that, that actually means you need more custom ASIC chips.
Isn't Marvell down a bunch today?
That's because they lowered guidance. I don't think that Broadcom's going to lower guidance by any stretch. And they also, by the way, have the industry-leading gross margins, operating margins, and free cash flow. So my point being is you're asking about the broader SMH. I think you have winners and you have losers. But if I had any lack of conviction or less conviction in the spending environment, yeah, that's when I would have a problem. I'm not concerned about the absolute growth numbers. I'm concerned more about if that spend slows, and you don't think $3 to $4 trillion by 2030. That's crazy. That's way more than anybody was expecting. I mean, I was thinking $1 trillion. That's a lot, too.
Okay.
But 3 to 4 is big.
Amy Raskin, how do you see it after the week in which we had NVIDIA numbers? The stock ran up a ton into the print. Yeah. Stock hasn't traded well out of the print. They maybe with their earnings report raised more questions than they have before. Data center growth, what's the real business in China going to look like, et cetera?
It's sort of interesting because we do own NVIDIA, and we've owned it for over 10 years now, and it's literally like a 30,000% increase. But I'm going to take sort of the opposite side of Stephanie. I think that $3 to $4 trillion number is crazy. I don't think that we're going to get there. I don't think you can get there and earn a return on those numbers. And at some point, that's going to matter. So we own it. We're underweight. We have huge gains in it that we've trimmed. We keep trimming. It keeps coming back up. But I do think it's not going to happen anytime soon. As long as there are shortages, ironically, that sort of makes people buy more because they're trying to keep the the chips out of other people's hands and get as much as they can. So I do think you're having a big pull forward. I think that's going to continue, which is why we haven't sold it outright and we're still in the stock. So I think you still have a while there. But I do think at some point, these inflated expectations are going to come home to roost, and you're going to see another big pullback in the stock.
I mean, you do have a highly concentrated customer base. We know that. CNBC yesterday, NVIDIA's top 2 mystery customers made up 39% of Q2 revenue. Customer A made up 23%, customer B 16%. That's higher than the same quarter a year ago when NVIDIA's top 2 customers made up 14% and 11% of sales, respectively, according to their own filing. We asked Altimeter's Brad Gerstner this very question yesterday when he joined us. He said, not a big deal. Listen.
It's kind of like saying the United States exports are dependent upon Europe, India, and Southeast Asia, right? The fact of the matter is these companies are as big as countries. They are the biggest buyers in the world. They're the only ones with the balance sheet and the free cash flow that can scale up compute at this level, at this scale. It's a huge national advantage. I don't view that as a problem. In fact, I view that as an asset.
What do you say to that? It kind of responds to a little bit of what you're saying.
Well, that's not, my issue isn't the customer concentration. My issue is whether those customers are going to be able to charge for their AI and get returns on it. And I think expectations for AI have gotten ahead of themselves. You saw the MIT report that said 95% of customers using AI don't see a return on it. I think it will come, but I think it will come over a longer period of time between now and 2030.
But one half sec, that's why I own Broadcom, because it's not just AI and data center like we just talked about. Right?
I know, but don't you think it's being valued on AI and data center more than anything else? I mean, come on.
I think certainly it is re-rated, no question. But I think the margins are sustainable because of the software business. That's when it started to re-rate, when they bought VMware.
The expectations aren't quite as high for
They're
Broadcom.
Not nearly as high. And maybe they don't get to 3 to 4 trillion. Maybe they don't get to 3 to 4 trillion by 2030. But even if they got to $1 trillion, that is enormous. And you want to own the best 2 companies, and that is Broadcom, and that is NVIDIA.
Let's look at 3 months, not even year to date. You don't think that expectations have gone higher as the stock has done what it's done over the last 3 months?
Expectations have certainly come certainly higher, but it's not the bellwether name. I do think the diversification helps. It's $1 trillion market cap versus a $4 trillion market cap. So I think that sort of tells you a little bit about.
Mr. Snipe, what do we do?
Yeah, listen, I hear both of the points, and I can appreciate both of them. I think for me, as it relates, whether the CapEx number is $1 trillion or 3 or 4, it doesn't matter. What I could say is the guidance is very strong, and obviously the AI theme is not moving anywhere, right? So as I look at the
guidance is based on expectations.
Yes,
right?
Absolutely.
No, I know, but not all I have expectations. My football team's going to do great this year.
Yeah.
Well, what if they don't?
There.
That's not a guarantee.
No,
it sure looks good on paper.
It's not. But what I will say is, even when we think about the concentrated return, we're talking about the greatest companies in the world that are spending money with NVIDIA, right? Now, if we go back a few months ago when all the announcements about the Middle East and the investment there and in the EU and sovereign and enterprise, there is opportunities elsewhere outside of the hyperscalers. So I don't think this theme is slowing down anytime soon. Yes, there has been some digestion. A lot of these companies have run a lot into these prints and through this whole year. But I don't
Well, not lately. I mean, lately, a lot of these stocks haven't done well. NVIDIA, Amazon, Meta, Microsoft, month to date, as we're about to wrap, are all negative.
And for me, I think it's just a season of digestion. We talk about this all the time. The stocks run up a lot into the print, then there's a little bit of digestion post-print, and then they really accelerate when we see something else. So I think that's where we are right now.